Uganda's power distributor Umeme opened its IPO on Monday last week, and the shares will begin trading at the Uganda Securities Exchange on November 30th. It's offered about 38% of its issued share capital at a price of about 275 Ugandan shillings per share. That's just under 10 US cents. Charles Chapman, the managing director of Umeme, is with us in Nairobi. What brings you to Nairobi? If 46% of the allocation for international investors, I'm told it's already snapped up completely.
Well, firstly, thank you for asking me that question. We came to Nairobi. It's been part of our strategy to involve East Africans in the Umeme IPO. If we go back about 3 years ago, when we looked at the second phase of Umeme, and the second phase of Umeme, the first phase was from 2005 to 2009, where we were restoring the network and investing. Second phase was all about outperforming our targets. One of the companies we modeled ourselves on in terms of losses was Kenya. I think it's Kenya Power.
Kenya Power,
now
yes.
Kenya,
Kenya
it was
Power
then
company, yes.
Exactly. So when we came to Nairobi, when I came there 3 years ago, I realized how astute the Kenyan investors were, and they said very clearly, we should work very closely and get our customers to understand and get involved in the IPO. So this is like a continuation for us. We're very keen that Kenyans would understand and get involved in Umeme. Now, I must add a caution. We are not actually listing in Kenya at this point in time. We're listing in Uganda. And when we've completed our listing in Uganda on the 30th of November, it's our intention to request a listing from the CMA, and we'll go through all the procedures then. But it's very important to us strategically because it will be the second biggest company in Uganda, and we see it as an innovative move that we can have a cross-listing.
Right, and the Kenyans and indeed Tanzanians are open to invest in this. They're being treated as East Africans who are locals in Uganda.
Exactly.
The other thing I want you to mention is the price of 275 shillings. Some have panned this as being too expensive. When Stanbic Uganda listed, it was only 60 shillings.
Yeah.
What do you say to this?
Well, I mean, price points are obviously interesting, 275 Ugandan shillings. The most important thing, I guess, is the dividend yield. And in the prospectus, our dividend policy will be 50% of EBITDA. So I don't think it's fair. I mean, presumably we could have taken any price point, but the most important thing is what's the yield going to be and what are the earnings? And I think that's a very positive price. Certainly the reaction we've had has been phenomenal to the pricing of the offer.
An important question is how much are you going to raise, or how much are you hoping to raise, and where are you going to be putting this money?
Yeah, the total amount is around about $68 million. Part of that will be used to pay off a shareholder loan. And the good thing for investors on the shareholder loan is that historically that loan was earning about 12% interest. And when that loan is paid off following the listing, that will mean that 12% will go to the new shareholders, to all of the shareholders, and effectively will increase the profit after tax.
One of the other important things, which is important for Umeme especially, is that your concession expires in 2025, and some have raised concerns that why should I be investing in this stock when your concession expires in 2025? Yeah. Explain for our international viewers what this concession means and how Umeme, how it is important to your company.
Yeah, the concession is 2025, but the basis of our deal is that we invest dollars in the concession. At the moment, I think it's about $104 million. We've about 150 in total, but on our books is about 104 million.
Right.
It's likely that I'm not actually allowed to forecast what the total capex is. But at the moment, this year, we're forecasting 35 million for this year. Now, if you project that forward and say there's $300 or $400 million undepreciated assets on our books, then the government, the formula of the concession is that the government will write a check for that plus 5%. But actually think about it. The growth story in Uganda is phenomenal. Karuma is due to come in about 6 or 7 years.
Yes.
There is at least 10% per annum growth of generation. So the investment on distribution, we're a low voltage and medium voltage distribution network. Ahead of generation, we have to keep investing. So the discussions that we will have with government and with the regulator is what investment is required to continue that. Now, just take a pause. What I say to my staff is, and to my potential shareholders and my current shareholder is, the opportunity in the legislation is there to extend the concession for another 20 years. What will drive that?
Yes.
Continuing the good performance that we have, reducing losses, improving connections. Government will not want to write a check for $400 million. They will want somebody to continue that process.
Right.
So the shareholders in a very happy position. They either can enter into discussions long before the concession ends about renewing the concession and how that will work, or they can decide, well, actually, we'd like to claim that $400 million or whatever the figure is and share it amongst the shareholders. So it's actually a win-win overall, and I don't see that as a disadvantage.
I wanted to touch on two things before we bring this to a close. One is the ailing power distribution network. It is not the best, and this has an impact on the quality, the reliability of the service you give to the consumers. And two, which is the significant debt burden, as some analysts have pointed out. Which one do you want to start with?
Well, I didn't hear
the power network. The power distribution network is.
And the second one?
And the second one is your debt burden. The debt on your books is significant at the moment.
Okay. Okay, the network, I said there were two phases of Umeme. When we took it over, there were 120,000 rotten poles, okay, and we replaced them. We then have about 20 or 30,000 that we're replacing, all networks replaced. So I would say to you that the network has significantly improved.
But I'm sure there's a lot more investment that needs to be done.
Well, that's true, and that's the opportunity, because the opportunity is that currently we only connect 9% of homes. So the opportunity with new generation coming on stream is to significantly increase that. Remember that all of that investment that we agree with the regulator accrues another 20% per annum. So our earnings will go up. The country saves because we bring down the losses and we connect new customers. Just taking the debt burden. Post-IPO, our current debts are a shareholder loan and IFC loan of approximately 20 million. With the IPO, there will be no longer a shareholder loan, and the IPO loan will be at about $20 million. But cash on hand nearly covers that. So actually, there isn't a debt burden as such. In fact, the company is very well positioned to leverage the balance sheet, because we've put forward a fairly conservative model. Anybody who understands the growth story of SAB Miller or of Hema Cement or Tororo Cement knows that growth in demand is about 20% per annum. And when as the generation comes through with that very minor debt on the balance sheet, in fact, some would say there would be no debt on the balance sheet, we're in a very good position to leverage the balance sheet and enhance earnings and provide that investment for the Kuruma project and for other projects going forward. So it's a very positive story for our shareholders, but most importantly for our customers. And just bearing in mind, I would say if any Kenyan is living in Uganda or has a Ugandan relative, there's an additional discount. Bear in mind, all East African investors are getting the same price as international investors. There's a further one share free with 10, which Actis is actually funding, which makes it a very exciting offer for people who are visiting Uganda. So you've
done a great sale.